Hi, this is Lee Phillips. I want to talk to you 2 seconds about a terminology that's used often called pass-through. It's a confusing term because people don't understand that pass-through is a tax term. It has nothing to do with the legal entity or the structure. People will say, oh, the advantage of an LLC is the LLC is a pass-through entity. Well, is it really? Corporation can be a pass-through entity. Depends upon how the entity, the corporation or the LLC, is going to be taxed. Now, what pass-through means is the owners of the company are taxed on the profit or loss of the company, and the company itself doesn't actually pay a tax. Yeah, they file a tax return, but the owners get a K-1, and then they're responsible for actually paying tax on their income with the K-1 added in or the loss. So if it's not tied to the structure, the legal structure, then any entity basically can be a pass-through entity. If you have a sole proprietorship, well, sole proprietorship is one guy, he's taxed on all the income, he puts it on his Schedule C, he or she uses their social security number. The business itself doesn't get a tax ID number. Now, the advantage of an LLC is the LLC can choose how it wants to be taxed. Do the owners want it to be taxed as a sole proprietor, one owner? Actually, we call that a disregarded entity. The entity is disregarded by the IRS, and they just look at it as if it's a sole proprietorship. They use the social security number of the owner, and he or she puts it on the Schedule C. Partnership, they get a K-1, and each one of the partners gets a K-1. They pay the tax. LLC, it gets to choose. Sole proprietor, partnership, or taxation under Chapter C of the IRS Code, or subchapter S of the IRS Code. You've always heard, oh, I have a C corporation or I have an S corporation. The corporation, the paperwork is identical. The things you have to do to maintain the corporation, the formalities in order to get the corporate shield and all of that stuff, absolutely identical, whether it's taxed under subchapter S of the IRS Code or it's taxed under Chapter C of the IRS Code. If it's a subchapter S, then it is a pass-through, and the owners get the K-1 and they pay the tax. If it's taxed under Chapter C of the IRS Code, then the company itself pays the tax. The only way it can get the money, the profit, down to the owners is to pay a wage or to pay a dividend. But if it's a dividend, that's a double taxation. That's another YouTube video, but it's basically a disaster. Now the LLC can choose to be taxed under Chapter C of the IRS Code or subchapter S of the IRS Code or as a partnership or as a sole proprietorship, disregarded entity. Corporations can only choose to be taxed under subchapter S or Chapter C. So when somebody says, oh, the advantage of an LLC is it's a pass-through entity, well, is it? It may or may not be a pass-through entity. If you choose to have your LLC taxed under subchapter C of the IRS Code, it's not a pass-through entity. So, pass-through tax term has nothing to do with the legal structure. It just means that the owners pay the tax of the on the profit or loss that comes from the entity. This is Lee Phillips, been talking about the terminology pass-through.